Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, April 14, 2015. Inside the numbers tonight, we're going to discuss the SPY and the E-mini contract, of course. I've got numbers and targets, and we'll talk about both the downside and the upside. We'll discuss crude oil and what the market looks like today. We'll go over the gold market. And we'll talk about interest rates in the bond market, and then we'll do the U.S. dollar, also known as the Dixie. So let's get into it. I've got some lines drawn in on the chart, and this is the daily chart of the SPY. And the reason I have the lines drawn in is because I've calculated and identified, and the numbers come from the E-mini contract. Let me show you those as well. Okay, and I've basically calculated numbers. I have 3 lines in here and 4 in the other chart because I left out the double bottom on the E-mini contract from here, and I put it in the Spider contract. But we'll get to that in a second. It's not that important. So on the downside, okay, and why do I keep talking about the downside? Because today, okay, let's go back to the SPY. Okay, where last night, where did I tell you that one of the first downside target was going to be, which was going to be a pierce of the 20 and the 50 period moving average, and really I had targeted around the 207.50 area, and that's where this first line comes in. Now we didn't get there today. We got close, but we didn't get there. So in my book, that's not good enough. All right, so that's where it leads me to believe, because I didn't have that target satisfied on the downside, it leads me to believe there's more downside coming either tomorrow, being Wednesday, or Thursday of this week. Okay, and the minimum requirement is for about that 207.50, and if I flip over to the E-mini contract, the minimum requirement is 2070. Okay, that's the minimum requirement. It's a pierce of the 20 and 50 period moving average. It's 2070. It's got to be achieved, or I'm not going to be happy that the downside is, and it may not be finished at 2070, but I'm not going to be satisfied until we hit 2070 at a minimum. From there, if the market does sell hard and it keeps going, okay, and this could be within the same day, could be Thursday, could be Friday, the next target is 2055 in the S&P E-mini contract. If you flip over to the SPY contract, what does that look like? It looks like about 206, give or take, let's say 25 cents. Okay, then you have the double bottom at 204, and then I've moved the line in the sand. My line in the sand used to be 204. Now I've moved the line in the sand to 202.50. And in the E-mini contract, that same line in the sand comes in at about 2020. This is give or take a couple of points, okay? So that's the line in the sand, and that's this move, okay? That's not to say a month from now or 3 months from now. That's not what we're talking about. We're talking about this week, okay? So my indication is for yesterday to be the beginning of a daily cycle top, and that's plus or minus 1 day, so maybe it's yesterday, maybe it's today. I think there's some downside coming. I've showed you where the downside targets are. Now, what happens if we don't get the downside, and or what happens when we do get the upside? What does that look like? Okay, so what that looks like is higher prices. Okay, as far as I'm concerned, as long as we stay above 2020 on the E-mini contract, and we close daily above 2020 and specifically weekly above 2020, we're going to have higher highs this year. And where those higher highs come in, we'll go back to the SPY for a second. And our first target is obviously to break these highs. And the high there is 12.12.24. And then we have a 12.12.97. And once we break that high, the next target is not 12.12. It's 20. I'm sorry, I'm getting confused. 212. Yeah, 212.97. Pardon me. And then it's 215. That's the next target on the upside. Okay, I was getting mixed up between the SPY and gold. Forgive me. Okay, so we've got 212.97. First, we have the double top at 212. 224, 212.97, and then 215, and then beyond that, we'll talk about it when we get there. Did I say 12.12 again? My apologies. Okay, so we've got the downside, we've got the upside. Now, I think that's about it for the SPY and the E-mini contract. And this is this week, right? This is Wednesday, Thursday, Friday, preferably Wednesday, Thursday. Okay? And then if we get a Wednesday, Thursday, and we get a culmination of a bottom into Thursday by chance, any of these levels, and if we get a reversal, meaning the market signals and it tells us that the market wants to go higher, puts in a bottoming tail, puts in a reversal day, any kind of bullish behavior, okay, Thursday would be an important day. And if we saw that occur on Thursday and a reversal signal on Thursday, we can pretty much buy the market with both hands, okay? All right, let's go over to the gold market. Gold market stinks. There's nothing going on in the upside. I had 12.12 on the brain, and it's interesting, and that's that Freudian stuff going on, because I kept saying 12.12 a minute ago, and the 12.12 I'm looking for is actually in the gold market. I'm looking for 12.12, then I'm looking for 12.20, and we're not getting it, but there was a little bit of bullish behavior today, and if we go over to the intraday chart, okay, you saw a low made, and then, so down here we had, this is last night, and then this is early today. So, this could be considered bullish behavior. So we made an up move. Now we move sideways. Okay, so we made a low in here. If for anything that could be deemed bullish behavior, no, we made this low here at 9 o'clock in the morning, and then maybe we're setting up for higher prices. And regardless, I'm looking for 12.12 up here. I was looking for a pierce of this high, and then I was looking for 12.20, and it's still not out of the question. It's just not happening on our time frame, but the indication is for higher prices in gold. So while gold stinks and it's not doing what it's supposed to do, this is where we are. And if we look at GDX real quick, there's not much going on in GDX. I'm going to go over to the daily chart. You have to get a rally in gold in order to get a rally in GDX, or it's just not going to happen. So that's where we stand in those two markets. Nothing's really changed from one day to the next. We have to let the market play out. We have to let the market tell us what to do. And when we get to those numbers, 12.12 in gold, 12.20 on the upside, we'll be able to determine whether there's higher prices yet, or the higher probability move is that the market rolls over and makes lower prices yet. But right now, the bias is for 12.12, 12.20 on the upside. Therefore, the bias is bullish. Let's go to the oil market. And the oil market is actually acting pretty good. So right now, we could be making a run at the top end of our channel. And if we do, that may be a good short. Right now, we're in no man's land, and that's why I took off that trade yesterday at 53. And if you look at the intraday chart, or even the hourly chart, you see how we took the trade off at 53 yesterday. We got as high as 53.05. The market rolled over, and then we challenged it again, and we came higher, and that's fine. I don't care that we went higher. I'm happy to have made the gain that we made from down here, and but there may be higher prices. So let's flip over back to the daily chart, and the higher prices may take us to the top end of the channel. And if we get to the top end of the channel, and depending on how we get there and what it looks like when we do, that may be a good short, but we're not there. We're in the middle of the channel, and right now the market's not telling us it wants to go higher. It's not telling us it wants to go lower. It's telling us it's in the middle of the channel, and that's the reason I took it off at 53 yesterday, even though we may see higher prices, but the probabilities were reduced once we got over 53, so that's why I took it. But when the market gives us a signal, I'll give you the signal, and then we'll take it together and make some money on the signal. Let's go over to the bond market. We'll look at TLT, and we saw higher prices in TLT today, mainly because there was mainly downward pressure in the stock market for the majority of the day, and that's the reason you saw higher prices. But the top end is still going to be about 133, 132 and a half, And once we get there, that may be a good short. We'll have to see it, just like other markets. We'll have to see what it looks like when we get there. And you know what? Let's say we get there Thursday, and let's say the market makes a bottom Thursday, the stock market, and the bond market makes a top at 133 or challenges the top at 133 on Thursday. That may be a very, very interesting indication for a short trade in the bond market, long trade in the stock market. Very, very interesting. If you look at interest rates, interest rates are meandering down low again, but like I've been saying for quite some time, I just don't see them getting below 1.8, even 1.82. So if we get down that low by Thursday, that would be a great, great indicator for another short in the bond market, long in the stock market, and potentially, now let's go over to the Dixie. Let's talk about the dollar. Let's look at the hourly chart. In fact, let's look at the 10-minute chart. Here's what we had. We said that we would see lower prices in the dollar. We told you that at least one day, probably for a couple of days. And we saw the rollover today, and the market was, now let's go over to the hourly. The market was testing, in this area here, we're going to call it 98.75, 98.70. I actually have it in my notes. Bear with me. 90, where was it? 98.93. 98.93. Okay, so we got a little lower than that, and now we're above that now. But I do have another number, which is 98. I think we can get down to 98 by tomorrow or Thursday in the dollar, and that's way down here. That's another nice big move. So basically, we could have a down move, maybe work off some of the oversold condition for a day or so, and then another down move down to 98. And if that culminates on Thursday, that could be a fantastic triple whammy trade. Long dollar, short bond market, long stock market could be a triple play there. So I'm going to keep my eye on that, and I'll keep you abreast of what's going on. But that's what I have on my charts. I have the dollar going down to 98 between now and Thursday. So we've got a bond potential trade, a dollar potential trade, a stock market potential trade. And then within the stock market, the stocks that I'm looking at, the potentials on the stocks, I'm looking at, I'll just give them to you right now. I'm looking at Biogen, I'm looking at Wynn, I'm looking at Kihu, I'm looking at Occidental Petroleum, I'm looking at United Airlines, I'm looking at eBay, I'm looking at Bed Bath & Beyond, I'm looking at Green Mountain Coffee Roasters, I'm looking at VMware, I'm looking at a lot of stuff. I got Solar City on the brain. So I'm looking at all those things that within the next day or so, at least some of them are going to go out to members in the form of trade alerts. So that's where we are. Hopefully it's helpful, folks. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.